We had founded Lubert-Adler Partners in 1997, and I had this idea to expand the platform into other areas. And the first area that I wanted to expand to was private equity.
Ira Lubert believes an investment in the program is an investment in the health and vitality of the Philadelphia and South Jersey region.
Happy Valley Casino is the brainchild of Ira Lubert, a Penn State alum who runs a private equity firm.
Ira Lubert, I'm not sure if Ira's still involved with the program, but he was an awesome booster at the time.
Welcome to Ira Lubert.
Special thank you to Ira Lubert.
I mean, you got Ira Lubert.
Maybe Ira Lubert or...
Like Ira Lubert.
Ira Lubert, Chairman Lubert-Adler.
Ira, Dean, and Lenny are three of the most talented professionals in the real estate and deal-making business. The real estate deals that they have done, both locally and nationally, are shaping our city and cities across our nation.
Welcome back to the third episode of the Lion Investor Podcast. I'm your host, Michael Morelli, and joined here today by my co-host, Joe Mesner, and our producer, Jamel Balade. It's a beautiful, sunny day here in Happy Valley. It's May 1st, 2026. We have a really special guest for you today, and I'm struggling to sum up their career in a few sentences, but I'll give it a try. He was a Penn State wrestler and alumni who has maintained pretty deep ties to the university and Happy Valley in general. He has since built an illustrious career in private equity and venture capital. That's a gross oversimplification, but we're going to get into all of it. So without further delay, welcome to the podcast, Mr. Ira Lubert.
Thanks for having me.
Absolutely. We're really thankful that you took the time and happy to have you here. To start with the beginnings, right? You grew up in New Jersey?
Yes, Newton, New Jersey.
Okay. And it sounded like, from what I read, your grandfather was sort of the one that steered you into investing real estate business.
Yeah, I observed my grandfather's name was Isidore Brody, came to this country from Romania when he was 18 years old and found his way to this little town in northwest New Jersey bordering the states of Pennsylvania and New York, and couldn't get a job in corporate America. So he started to become an entrepreneur. And he started with a butcher's shop, then a liquor store, and every time he was able to accumulate a couple extra dollars, he bought real estate. And I think at his peak, he had like 9, 10, 11 duplexes, triplexes, all within the town of Newton and the neighboring small towns. And I used to go to his house when I was in elementary school. I'd go once or twice a week. I'd walk from school to his house. My grandmother would make me lunch, and I would hear his stories about when he was growing up and then his businesses in Newton. In fact, the house he lived in got sold to become the first Sunoco station in the state of New Jersey. So things like that really resonated with me. I learned a lot from him. And he taught me the pillars of real estate investing that really were my guidelines and guideposts when I started. And maybe for your listeners, I've done this a long time, lots of different investments, but income producing real estate has 4 to 5 attributes that I've never been able to find another asset class that can duplicate. So you buy a piece of income producing real estate, and the first thing is a tenant pays you money, and that money not only pays down the mortgage, so someone else is paying down the actual cost of the building, even though inflation is increasing that building. If there's excess cash flow, they're giving you income. The government is giving you something called depreciation so that you're offsetting other income along the way. When you sell it, you get what's called a capital gain, which is a tax break to ordinary income. And if you maintain it and die, you get to give it to your heirs, and they get to start that fantastic process all over again. So I defy anybody really to find an asset class that gives you a combination of those kind of attributes. And if you were to just follow that guideline and be very disciplined and focused over time, it would provide a very nice return for you.
I agree, and I've gone into real estate myself at a much smaller scale. But that story, are you familiar with Richard Kawasaki? Rich Dad, Poor Dad. He had a famous book. It was very famous, but he talked a lot about, that the relationship he had with somebody who was a mentor to him, and it sounded very similar to the story with your grandfather. So, so moving on from the early beginnings, you came to Penn State in 1968.
1968, yeah.
On a wrestling scholarship. What drew you to Penn State, and you selected to study hotel management? Why hotel management?
Well, quantitative business analysis. I couldn't pass it. So I dropped out of business and went into hotel management my freshman year.
What drew you to Penn State?
A guy by the name of Rich Lorenzo, who used to be the wrestling coach, happened to also be from Newton, New Jersey. And I didn't start wrestling until my sophomore year of high school, and he would come home at Christmas and come into the wrestling room and really taught me a lot of wrestling. I knew nothing about it. He got me a lot of exposure, and he was such a kind guy. He took me up to Penn State and let me witness wrestling matches, see the university. So kind of my junior year, it's really what I wanted to do was come here.
That makes sense.
That's awesome. So, and when you were at Penn State, you actually started investing in real estate of your own. So how did that opportunity of these mobile homes come about?
Luck has a lot to do with how your life proceeds and ends up. So in 1968, it happened that the university oversold the campus by, I don't know, about 1,500 kids. And it ended up that actually some kids pitched a tent on Old Main Lawn. And Eric Walker was the president then, and he went on local TV to ask local residents to open up their homes to these kids. And what I think happened over time was as kids flunked out or transferred, they were able to find housing at the university. But that year was just, I guess, every offer they gave to kids, most of them took them versus going to other schools, and it ended up having an undersupply of rooms for an oversupply of freshmen. And it actually started me thinking about some kind of a housing solution. Again, I'm 18 years old and felt I was always interested in business. And so I started looking around and I noticed there was a alternative home opportunity in mobile homes. And back in 68, there were many more mobile home parks than there are today. Most of those parks were sold and developed into what is today real estate. And I bought and lived in a mobile home for 3 out of the 4 years I was here. And I lived in it at 2 different locations. So what I noticed was after observing that guys, girls come to Penn State, they start dating, some get serious, and all of a sudden one of the girls gets pregnant, and one of the parents over the summer buy a mobile home for them to live in for the next 3 years. Because I don't have to tell you, a 2-bedroom apartment in State College was probably greater than most of these folks could afford. So in the fall, they would buy mobile homes. And then I noticed in the spring of my freshman year, there were 30, 40 mobile homes for sale. These were folks that lived in them for 2 or 3 years, graduated, got jobs with GM or Ford or IBM, and I'd wait till the last week or 10 days, and whatever mobile homes hadn't sold, I would go in and try to buy at an attractive price. I would put athletes in them over the summer just to cover my costs. A lot of athletes would stay up over the summer to work out. And then in the fall, I would sell the worst ones and then keep the best ones. And my partner was Rich Lorenzo. He was actually the assistant coach at the time, but I did the buying and the leasing, and he did the maintenance on these mobile homes. So I think in total, we ended up having 39 mobile homes. Just before I graduated, I sold it to a group, and I bought my first multifamily apartment building, 32 units in Lewistown, PA. So that's my original exposure to real estate at Penn State.
With those mobile homes, did you own the land or solely the? Okay.
Only the mobile homes.
Gotcha.
Yeah.
And then when you sold those and bought the building in Lewistown, you 1031 exchanged it.
Yes.
Correct? Mm-hmm. And you know, a lot of the people I follow online that do, you know, the 1031 strategy, they keep that snowball of tax liability rolling forever until they die, basically. Did you ever pay the government, or okay, you
Yeah, I
stopped
did.
the snowball?
Yeah, I would say, I don't have any statistics on this, but I would say if 1031ing throughout your whole life is extremely difficult to do.
A little stressful.
So anybody who accomplishes that, I would have a lot of praise for.
Fair
But
enough.
the 1031 works. You don't. I mean, it's good if you could do that, but if you just use it to enhance the value of the assets you have, it does a lot of good as well.
With the 1031, does it have to be a like investment for a like investment? So, for example, let's say you have a portfolio of single-family homes that are rentals. Can you take that and buy multifamily, commercial?
You can.
It doesn't matter?
Yeah,
Okay.
you can.
Okay. Good to know. So then, I guess moving on from that, right, getting into your career a little bit more. So after Penn State, you went on to IBM. You had a pretty good run there and became one of their top salesmen, from what I've heard. And then at some point, you made a switch from, you know, working in corporate to the more private equity space. And from what I've gathered, there were two people that were kind of critical. And if there's any I missed, let me know. But I gathered that was Pete Musser and Dean Adler. Is that fair?
You know, I was in real estate far longer before I co-founded Lubert-Adler with Dean. So I actually was approached and introduced to Dean by my personal attorney at the time, and got to know Dean and his incredible talent. And I convinced him to leave his current job to start Lubert-Adler. On the private equity side, before at age 47 is when I started Lubert-Adler. I tell this story. I have the utmost respect for entrepreneurs. I've met all entrepreneurs, all shapes and sizes, people that funded their business on their credit cards. People consider me an entrepreneur, but I really never did. I did not become an entrepreneur until I was 47 years old. I made a lot of entrepreneurial investments, but I had the luxury of a salary and a bonus in corporate America. The true entrepreneurs are the ones that risk everything for the conviction they have for an idea or a business. And that wasn't me. But I said to myself at 47 years old, if I was ever going to be an entrepreneur, if I don't do it now, I'm never going to do it. And with the blessing of my boss at the time, Pete Musser, who really taught me the private equity and venture capital business, I pursued a concept at Lubert-Adler that has worked out very well. I retired from Lubert-Adler 2.5 years ago after 26 years, but it was a great experience.
What did Lubert-Adler focus on at the beginning? Was it technology?
No, Lubert-Adler was solely real estate, and I call it opportunistic real estate, not value added. So we would buy problem assets or change of use assets. That's primarily what we would do. So someone who was undercapitalized, had a hotel, the hotel was struggling, the bank was foreclosing, we would buy it, renovate it if necessary, and then run it. Or a vacant office building. We did more of this than anybody in Pennsylvania. We would buy a vacant office building, convert it to apartments. Our goal was always to, when we would underwrite something, we always wanted to end up being 85 to 90% of the competitive set. And you can't do that if you put a shovel in the ground and build. If you buy a piece of land, get it zoned, build something, you have no competitive advantage. But if you buy something at a deep discount to its replacement value, change its use or keep its use. And again, a bank comes in and forecloses on somebody, unfortunately. If we can buy that asset from the lender at a deeper discount and be well capitalized, our opportunity to do well goes up.
Right. I read about the battery a bit, and that kind of fits that bill as well. That was an old power plant that was converted to...
1923 Pico power plants at one time supplied a third of the energy to the city of Philadelphia. It happens to be where my offices are now. And my partner, Dean Adler, took that building and converted it to its use today. And it's won a lot of awards for historic renovation.
Very cool. And you started a lot of other funds as well. I wrote down a few, but I honestly started to get frustrated doing my research because there's so many that you're directly or indirectly involved in founding or co-founding. But I had, of course, Lubert-Adler. I had Independence Capital Partners, LLR Partners, and LEM Capital were some of the major ones. Are there any big ones that I missed in there?
Well, we had a life science fund, a banking fund. We had a corporate lending fund called LBC. John Brignola, my partner, brilliant businessman. And we raised money from pension funds, and he lent it to corporations. A really good business. We've since sold that business. And we had a bankruptcy fund, and then we had a office-only fund. They only invested in office. So we had 8 funds at the peak, about $24 billion cumulatively raised. Large for Pennsylvania standards, but not large for New York or West Coast standards. But, you know, the Blackstones of the world, Carlyle's far greater. But for Pennsylvania, very respectable. I had a group of 8 different sets of partners running independently those 8 funds. I was a general partner of all 8. That Independence Capital you mentioned was what I call the co-op, not-for-profit back office. That was the differentiation of how we were successful. It was a concept that I put together when we formed Lubert-Adler. And what it did was we were able, under a co-op, buy the best back office resources. So we had a dedicated lawyer, accountant, finance, compliance, human resources. And every one of the 8 funds would buy services at cost. I never made a penny off of it, but it was able to let the people running the funds do 2 things. They could concentrate on making investments, and the back office investor relations was handled by this very well-run integrated solution called Independence Capital.
So in conjunction with all those, you have your family office, Belgravia Management, correct? And so what role does that serve in your portfolio, and what does it mean to you?
So 17 years ago, I formed Belgravia Management as my family office, and I never actually worked in it. I had an office there, but I rarely went there. I met them every Monday for a kind of 2-hour meeting. And others ran that office. Today, as I've now retired from all my funds 2.5 years ago, I'm full-time running my family office for philanthropic reasons. We do the same things that I've been exposed to for the last 50 years. We have 4 major platforms. We invest in debt, opportunistic real estate, venture capital, and operating companies. So we do 7 people. We do that. We're very active in making investments. Then when I pass away, all of those proceeds will go to 2 charitable foundations to be given out by whatever I don't give out while I'm alive, given out by my wife and her kids and my son and daughter and their kids.
Well, you obviously have a great talent for finding people, and you've worked with, well, at one point you said it was over 100 partners, I believe, in some capacity. What do you look for when you're finding people to work with and make deals with?
I really do pride myself in having, as I reflect back, I've had great success having partners. And again, I run my business world based on 2 things. You have to have differentiation and/or barrier to entry. And I go about that in every business situation when I'm analyzing a company. So I have this mantra, I find the best guys. And in the case of one of my private equity funds, I approach these world-class people. I tell them, let's go form a fund. They're a full partner of mine when we start. Over time, they earn more than I own, so I'm always the minority partner by design. And through their success comes my success. The difference is they're running their fund 24 hours, 7 days a week. But I'm able to be involved in multiple situations. So I have focus and differentiation of the number of assets I have, so that if something goes bad on one, I can recover with the other. And I really never lost a partner. What happens is, I found this out early in life. if you were my partner, when you went to a cocktail party and someone said to you, or if you're at my casino and the guy sitting next to you at the blackjack table says, "What do you do for a living?" The last thing you want to say is, "I work for Ira Lubert." I think what you want to say is, "I founded the ABC company." On a good day, you might say, "Ira Lubert's one of my investors." But you want to be in control of your own destiny. You want credit for the risk you've taken, and you want to control your asset. So I compete with, outside the funds when I'm now making investments, I compete with private equity funds like my own LLR. When you have a fund today, they'll come in and want to invest in your company, but 9 times out of 10, they're going to want to buy control of your business. Why? Deep down, they think they can do it better than you. Second, they're taking in money from investors like pension funds, and they have an end date by which they want their money back. If you only buy a minority piece and you end up not wanting to sell, I'm not saying that they can't control the outcome, but it's a lot harder scenario. So most investors with third-party, what I call institutional money, really wants and needs control. So under quote-unquote differentiation, I follow those folks into a company and I say, "I just saw the private equity guy leave. I know he probably wants to buy 51% or more of your company." I always say the same thing. Why would you ever want to sell control of your company to Joe Blow? I know Joe Blow. He's a brilliant Wharton MBA, 35 years old. But do you want a 35-year-old Wharton MBA telling you how to run your business that you started and have run for 27 years? I want to invest in your business, but I don't want control. I want a minority but meaningful piece. But by the way, I can't pay you what he's paying you because he's getting what's called a majority premium. He's buying control. I want a minority piece. You have to give me a minority discount. But here I'll contend, if you sell me 30%, you keep 70. And if hypothetically you're 57 years old, in 7 years, when you're 64, you really do want to retire, I contend owning 70% for the next 7 years. If we're right, you'll end up making more money had you sold 51% 7 years earlier. It doesn't resonate with everybody, but it does resonate with enough people that I've been able to build a very meaningful investment portfolio.
Clearly it has. But when you're selecting for this world-class talent, right, and trusting these people to run it, and you're not going to take full control, you're going to let them keep that control. What are some traits that you look for in those people besides their expertise in their domains?
Great question. I call that a Jacks or better opportunity. So I look for investors that have to have a lot of great positive traits, but they have to have these 4. They have to be honest, ethical, committed, and capable. And honest and ethical are close, but they're not the same thing. And I have violated that on several occasions in my life where I fell in love with either the technology or the opportunity. And not all the time, but a couple times it's really come to hurt me. I mean, the investment didn't do well or the problems were not worth the result. But I call that best of breed partners. And I have found that if you have a great partner with an average deal, he or she will end up doing better in the long run. Or when you have a problem building a business or a problem with a piece of real estate, and you very much have those issues all the time, a great partner will be able to work through problems better than an average partner.
Pivoting a little bit more into the private equity space, have you ever acted as a syndicator, or do you typically always hold a piece of what you're involved in?
I've never raised money for third parties to buy 100% of an asset that I'm not involved in. And even now in my family office, when I raise money in my family office, I am always the largest investor. I have a strong philosophy that if I ask you to put in $1, I will have at least $3 to your $1, at least, maybe more. But in the event it doesn't work out, I want to be the one that loses the most money.
And I'm sure that offers a lot of comfort to prospective investors. Speaking about venture capital and private equity, we're sort of seeing the lines start to blur a little bit. Is that fair to say, from your perspective?
In what way?
We're seeing a decrease in IPOs, and we're seeing a lot more PE activity start to pick up in that space. So some have been saying that the lines between the two are starting to blur.
Well, it's because there's so much money in private equity. It speaks to a couple of things. One, private equity has become very competitive with a lot of dry powder, and they bid up assets. They borrowed a lot of money to leverage those assets,
Right.
and then interest rates went up dramatically over the last 3 years. They're leveled off now, starting to come down, but over those 3-4 year periods, the cost of borrowing exceeded the growth of those companies. And quite honestly, there was a ton of money available to borrow and to invest. When something like that happens and you're using other people's money, you tend to bid things up so that you can get something bought or closed. And you're seeing a result of that. And then the IPO market is just a very selective market. They go through trends as well. They went through a trend of these things called SPACs. Everybody formed a company to go find something. There's always a deviation. And at the end of the day, it got saturated. Same things with IPOs. You went through a period where some private equity firms were buying other private equity firms' assets and marking them up as they bought them. So it's all these gyrations. But I would say with all of that, private equity as an asset class has outperformed, I believe, every other asset class over a 20, 30-year period. So it is a really good place to deploy dollars. But if you're going to deploy those dollars, you really have to spend a significant amount of time doing the diligence on who you're entrusting your capital to.
So on the topic of some of those investments, were there any investments or opportunities that you passed on that you went on to regret later?
Oh, God. I don't look back, but I tell my kids there's 3 or 4 opportunities I had that I didn't invest in that ended up doing really well. And, at the time, you just can't get them all. The reasons, I thought some were overpriced, but they executed incredibly well. In other cases, I didn't think I was going to be able to add value. And in other cases, I didn't think the entrepreneur and me would be able to coexist together in a positive way. Those are probably the 3 reasons, mostly, though, because I thought the asset was overpriced and I passed.
Is there a number 1 on that list that you can tell us about?
I would tell you that before I formed Lubert-Adler, I had an opportunity to invest a meaningful amount of money in a professional football team that I thought was overpriced.
Sure. Fair enough. Shifting a little bit and playing off of what we talked about, but all the buzz is AI now, right? Everybody's talking about AI. Has it shifted how your investment strategy works and perhaps how your due diligence process works, especially when evaluating a tech company or SaaS company? Has it changed anything for you?
So I don't yet use AI. I don't know how to use it, to be honest with you. I have 7-member family office. I have 2 Penn State graduates in the company. They use it extensively for a lot of things, investor letters, but also due diligence, analyzing legal documents, things of that nature. But we have yet not, my one guy, we looked at a couple companies where he thought AI was going to have a negative impact on the future growth of this type of a company, and we passed. So they're more involved and knowledgeable than I would be. I'm primarily, when it goes to operating companies, we're looking for, more of a nuts and bolts, non-technology operating company. That's what we invest. I'm Primo's Hoagies, if you heard of those. I'm part of the syndicate that just bought that company. I'm not I'm a minority owner, But things like that are a lot, here in town, there's a company called Snap Pizza. So I happen to own half of Snap Pizza, 10, 11 locations, and the best one is in State College, the biggest producers in State College. So I look at a lot of those opportunities as well.
It's rare for you to go half in.
Yeah.
Why did you go half in on that one?
I started out at 25%, but I bought out a partner to got me to 50%.
Okay,
So.
Fair enough. Yeah, that's interesting. Has it changed anything as far as evaluating the moats to a business? Right now, with a lot of the SaaS companies, they're getting their public stocks are getting hit pretty hard because AI is eating away at their moats. And has it changed anything in terms of evaluating those protective moats of a technology business in particular?
Yeah, again, we don't really understand the technology. We tend to follow, not lead. We're in a really good cyber business that we went in 4 years ago. Cyber technology software had a unique asset. We haven't seen, at least I'm not been told, that AI is impacting it in any way yet. We are involved in a couple SaaS businesses, and so far so good. Like anything else, there'll be examples where it will have an effect. I think it's an overreaction today for the public stocks, but what that only does is help us when you're a buyer. It doesn't help you when you're a seller, but it helps you when you're a buyer today. And you want to be a buyer when things are down and a seller when things are up.
That's a hard thing to perfect. When everyone's panicking,
yeah,
it's tough to be the contrarian.
I've been a contrarian my whole life.
It's tough to do that, though. It's a lot of risk taking, and we'll circle back to risk taking. I want to talk about that particularly, but to sort of wrap up that topic on the private equity and sort of that space, there's going to be a massive shift in wealth, right, from the boomer generation to millennials and so on. Is that going to spur, a massive influx of private equity activity? And when you add in AI on top of that, what industries do you think are going to survive, and what industries look attractive?
I mean, look, you're always going to have players, wealth-oriented industries, RIAs, Wall Street folks, the quality houses like Blackstone. These are smart folks. Their job is to have you entrust your capital to them, and they'll come up with opportunities that they feel they can get, oversized returns. I think the next generation that will be a lot wealthier than their previous generation of parents leaving trillions of dollars, I don't think the process is any different. I really don't. I think you entrust your capital to someone that you trust, relate with, hopefully did some due diligence to validate that, and then you watch their performance. I think there'll be more capital available in the next generation than in my generation. And I believe the options will be fairly similar. You can go the public securities route and have someone advise you on that. You can blend with a little bit of more risk-taking in real estate and private equity or venture. The added dimensions of new things that pop up like crypto are for people that are far more maybe intelligent than I am. I never would take the time to understand it, so I never invested in it. But back to the fact that, look, I tell this story to my kids and others. Don't ever, when you talk about, when things are down, deploying capital, being a contrarian, I would tell you that when you think it through in this context, don't ever bet against the U.S. economy. All economies are bad, but the U.S. is what I call the best of the worst. So when I give these examples, you're a billionaire from South America, China, India, Russia, Europe. Where do you put your money? In the U.S. So I would contend if the U.S. economy ever craters, it doesn't matter. Life as we know it's over.
I have a similar outlook.
So why not deploy capital in the best of the worst economies?
Sometimes, though, people get stuck trying to catch a falling knife, right? And how do you look at that? Do you cost average down?
Yeah, always have enough reserves, and then don't ever try to get the bottom,
Right.
but do a lot of comparisons to valuations prior. But if you're investing in a company, make sure you understand the company, make sure you understand the management team, their capabilities, make sure you're a patient investor. And in my case, I always want to try to feel like I think I could add value in some form. And I migrate to those situations more than anything.
Very good. Lastly on that, you mentioned RIAs. Do you mind explaining for the audience what an RIA is?
A registered investment advisor. So it would be someone that you might entrust your capital to. And on a Monday, they might recommend you buy Berkshire Hathaway stock. On a Tuesday, they might show you a fund that invests in companies or real estate that their companies are sponsoring. One question I always ask when people present me these opportunities, third parties, is how much of your own personal cash are you investing? If this is such a great opportunity, why am I so lucky? So, it's all those are all parts of due diligence you should do when entrusting your capital.
Makes sense. And moving on to more of your activity on boards, how many boards have you served on?
Many. I've never honestly counted them up, both philanthropic and corporate. I've probably been on 5 or 6 public boards, probably 30 or 40 private boards. I let my guys kind of sit on the boards today, but I'm in every board meeting as an advisor. And then I've been on probably 15 or 20 philanthropic boards.
I even got that at one point you might have been serving on like a dozen simultaneously.
It's possible.
Which to me is quite crazy. And notably, to name a few, but not all, there's, of course, the Penn State Board of Trustees, which you've served on for 17 years, the United Way of Philadelphia, Thomas Jefferson University Hospital, National Constitution Center, the Franklin Institute, to name a few. And just to ask a couple questions on that first, how do you find time to sleep?
I'm a very bored person when it comes to this. I'm in bed every night before 10 o'clock. I get up at 5:36 in the morning. So I sleep well, have my whole life. But, I think it's just organizing your time. I've been very fortunate in my life. I've done far better than I ever thought I'd do or ever think I deserve to have done. And I think giving back's important. So I've picked out some very meaningful nonprofits, and I've given with my time and my treasure.
I want to circle back on time management. I actually have a question about that because time management's critical in life. But secondly, on the boards, which boards are you still active on today, if any?
I decided at like 73 years old, I think it was, that I was going to let other people do the philanthropic boards. I'm on boards for investments I've made, but on the nonprofits, I've either termed off, which is the case with Penn State, Franklin Institute, National Constitution Center, and Jefferson Hospital. I was on so long that at a certain age or number of years, you are politely asked to leave.
Fair enough.
You can stay off for a year in most of them and then go back on. And I've been asked to do that, but I've refused in every case.
So one of the more recent boards that we know you serve on is the Penn State Coccozello Institute of Real Estate Innovation, which coincidentally my father is the associate director of. So what does that mean for Penn State? What drew you to that board, and what do you think that means for the future here?
I'm friendly with the founder of that board.
Sure.
He's a real estate legend in North Jersey in a pharmaceutical area. He asked me to get involved. I'm embarrassingly haven't been as active as I should have been in that board. More advice and counsel than anything. But when he formed the board and when he made his gift to Penn State, he called me and asked me if I'd be on the board initially. I told him I wasn't going to do it for a long time, and I really haven't done a great job going to the meetings. I get caught up, but I really believe in what he's doing, and he's making a great impact and has a great board.
they had their first conference, I believe, on Monday. Unfortunately, Joe and I were going to go, but we ended up missing it. But no, that's great. And a little bit more on the Penn State side. Obviously Penn State wrestling is something that's near and dear to you, and you've been quintessential in building the program to what it is today. I would say that's fair to say. My cousin Gino went through the program and has gone on to start a pretty successful career. He was doing a bit getting into the MMA professional fighting world. I think he's taken a step back because he had some injuries. And then our producer Jamel his dad is father-in-law is John Fritz, and he was the head coach during the 90s. Yeah. So, speaking about, the wrestling program, I wanted to give you some time to speak about sort of the future of that program or any comments that you might have on it.
Yeah, well, by the way, I know John well, great guy. Wrestled after I did, just a phenomenal athlete and coach. I say to people, the Penn State wrestling program is like someone's golf game. It's really was my hobby, but it really meant more to me than just any hobby. And it all goes back to when I competed here. They had another heavyweight by the name of Dave Joyner, who to this day is one of my closest friends. But at the crucial times, my junior and senior year, he beat me out to go on to wrestle in the nationals. And, in other schools that I was offered scholarships to, I won't name them, and I rejected them to go to Penn State. They could have taken my scholarship away. They could have at Penn State as well, because I didn't make the team when it counted most. And they never did. I never forgot that. So I always said to myself that, this is the kind of environment, the value system of the people connected to Penn State that I really admire. And I just said, if I'm ever in a position to do the same thing and help, I'm going to do that. And I think I've done that. I think I've achieved that goal by giving a lot of my time to Penn State, both in the wrestling program and the university through the Board of Trustees and other groups, but also from my checkbook. And as it relates to wrestling, I'm very proud of the fact that when they were looking for the replacement to Troy Sutherland, I was able to get on the committee to help pick the next coach. There were 5 of us, and it wasn't unanimous, but I really felt strongly we should get Cale. And I articulated that very aggressively to the committee. And thank God over time we won over enough people. Because what I saw at Penn State, not in any way a criticism, it happens in a lot of places, I felt strongly we needed a culture change. What we had, when I came here in '68, we had Bill Cole, who didn't go to school here. Then from that point on, we had all Penn State successful wrestlers and unbelievable human beings that succeeded as coaches. But the culture was all the same. The systems were all the same. I felt strongly, we'd go to the nationals every year when Gino wrestled, and we'd finish, in a great year, we'd finish 3rd, but every year we'd finish 3rd through 8th or 9th. And I kept thinking to myself, how are we can we change this? I remember I've been to the nationals every year since 1973. I go every year, and back in the Gable days of Iowa, we would go out hoping that we would be 2nd, 3rd, or 4th. We never even thought about being first, or at least I never thought about us being first. So when we were able to go out to Des Moines, Iowa, Cale wouldn't let us interview him in Ames. He drove to Des Moines, Holiday Inn. After 2 hours, I just was convinced he was our guy. And I flew him out of my plane, the committee, and on the way back, I did my best to convince everybody. And thank God we got the majority to agree. And there were a couple on the committee that didn't think Cale wanted the job. He wanted to just have someone offer him the job so he could better his position at Iowa State. I never believed that, and it ended up not being true. So he's an amazing human being, and what he's built here will go down as the greatest college sport coach of any sport in the history of college athletics, in my opinion.
We're bringing over all the Iowa guys. Great. On the wrestling note, can you talk a little bit about the Real American Freestyle RAF and how that's sort of changing things for collegiate wrestlers and their opportunities after school.
So it's funny you bring that up. I happen to know a lot about that because, ironically, my son, who is 46 years old, he called me and was introduced to Chad Brownstein. I think Chad wanted to get to me. He was introduced to my son, who lives in Naples, Florida, and he was just starting the league. And my son brought him to see me, and he wanted us to buy a piece of his team. My son did. So my son is on the board of directors of the company and helping to grow that business. I went to the very first match. First match was in Cleveland. The second one I was able to get hosted here at Penn State, and I went to that. And I'll be honest with you, I had mixed emotions about all the fire that shoots up from the floor and all the signage and music and the interviews. Not what I'm used to in a wrestling match, but I'm not the generation of young kids that, want to aspire to have their role models. So I really wanted to give it more time, and they've done like 8 events, every one better than the last. Their viewership has grown tremendously. Fox streaming is every 3 months, it not only extends, but increases the amount of money they pay for viewership. It's just doing great. And, they're going to end up being, I believe they'll end up being a very big success. I really do. There's no place for these wrestlers to go. Yesterday, it would be MMA, or like Jason Knopf tried jiu-jitsu, I was told, for a while. He's now back in RAF, but it's really a good outlet. And then for me, what I call a purist wrestling fan, just think of the opportunity. If you had a wrestler that wrestled like I did from 1968 to 73, but in 1975, there was another great wrestler, but they never wrestled unless it was for the Olympic trials. RAF can bring those groups together, those two together.
Right.
And the hype before that match, the buildup, be amazing. And purists like me really want to see that happen. And I think that's going to really be a cornerstone of how they grow the business.
Pivoting to local stuff, Happy Valley. We wanted to talk a little bit about your thoughts on Happy Valley. You've said that Happy Valley is the greatest place on earth, I believe. And I think Joe and I both agree.
Absolutely.
Where do you see the trajectory of State College going from an economic and population standpoint in the future?
Yeah, I think it does nothing but continue to grow. First of all, it's a great place to raise a family. You have all the advantages of a large city without most of the problems of a large city. So you have arts, culture, athletics, etc. Second, the cost of living is very reasonable in State College. Third, you have you have a lot of place to additionally grow housing and industrial locations. So and then you have the engine, which is Penn State University, to give you all the things that will keep you excited and honed to the area. So I see nothing but continued growth, and I've seen this growth since I came in 1968, this continued growth constantly, but on a very organized and measured basis. It's not crazy. So you don't, and the other thing I see about the economy is never phenomenally growing here, and it's never really bad here. It's kind of an island among itself of economies, and it's a great place to raise a family.
It is. Joe and I both grew up here, and we were raised here, and it's a fantastic place to grow up. And you're right, it's very insulated. During 2008, don't really remember much going wrong.
Well, you obviously own some real estate in town too, and I notice you've taken an interest in the rezoning possibly here. What are your thoughts on how that's going to change like the west side of town and some other areas?
Yeah, we happen to own a couple, I guess we own 3 duplexes that wrap around from West College to West Beaver, and that's where that zoning ended. I've happened to own those with a guy who's now passed away, Sam Letts, and his kids run the properties today. But they were among the first properties I ever bought. And for that zoning, at some point, it could be a good assemblage to build something bigger.
Sure.
So that's why, again, my partner's son was more active in wanting to get it done. They called me for advice, and I helped organize the approach to make sure we were being what I felt was being treated fairly, and it ended up they were, and everything worked out. And someday I'm not sure we'll develop something there, but someday something will get developed there.
Piggybacking off of that a little, do you ever see State College making a transition from primarily a college town into something different, a little bigger, with some industry, possibly, maybe even a city almost?
I don't really think so. I think the university will always be the hub of growth, and I think there'll be a lot of spokes coming off of that. There'll be a lot of innovation, but I don't really see a mass of commerce coming here.
Fair enough. I want to circle back real quick to the properties you mentioned that you have here. As someone who's gotten to where you are, why did you decide to keep those 3 properties? To me, it would almost seem like
I think
more
I
of
have
a
6 properties, but I don't even know.
But still, it would almost seem like more of a nuisance to somebody.
So
like
let
you.
me go back to my comment about when I invest with a partner. When I'm a minority but meaningful partner, one of the things you get as the majority partner is the right to sell whenever all major decisions are made by you, not me. All I ask is, in my documents, that if you decide to sell, you have to tag me along. I only have kind of 3 rules as a minority owner. You can't hire your daughter or son. You can't give yourself a massive raise without my approval. And you can't take on massive debt. Other than that, it's your business. You run it, you make every decision. You keep me informed. I want to get a copy of your financials every month or quarter. But if you wake up on a Monday and you're tired of it, or tired of me, and you want to sell, you sell. So these properties have been in their family. It's a much more meaningful piece of their life than mine. But yet, I get amused. I get a report once a quarter, and those 6 little properties are on that report, and I get a check every 3 months, and have been for 50 plus years.
That's
I
awesome.
bought those in the early 70s. I had another property with another State College gentleman, Penwood North Apartments, and we sold that like 4 years ago. Had that for a long time. He wanted to sell. He's now 91 years old, and we sold it. So properties are always getting sold. I have well in excess of 200 different real estate properties, of which I am all but one I'm a minority owner of. And, I get a call on a Monday, I want to list a property. We sell it. If not, we refinance it, and that's what I do.
Sure.
Can I ask what the breakdown is of that portfolio in terms of single family, multifamily, commercial?
I have the most multifamily apartment buildings, I think, than anything. Believe it or not, second, probably I own the most hotels, because I own a meaningful piece of a hotel management company. So I would say that would be second. Office buildings would be third. Then I'd say industrial is fourth.
And in the multifamily, is there like an average number of units that you typically go after?
200 plus.
200 plus units. Is that called Class B? Or what?
Well, what we buy is Class B apartments, renovate them to a Class B plus or A minus. We don't build anything from scratch. As I told you, it's hard to make money building anything today. We buy other people's problems, or people that want to sell an asset that needs to be renovated to a different class asset.
Is that predominantly in Pennsylvania or all over?
Primarily up and down the East Coast. I have some West Coast stuff, but very little.
In terms of local development, you've been involved with something that's been a very hot topic in town recently, the Happy Valley Casino. Joe and I talked about this actually on the first episode and second episode with our
Both
guest,
of them, yeah.
Todd. And we actually went during the soft open. We had a great time. We played some blackjack, and it was a good time. But I know there were some challenges to the license at the beginning. And they're resolved now. But what we wanted to ask was, how does an opportunity for a license like that come across?
The state of Pennsylvania approves gaming as they see the results. With budget deficits, they think they need more revenue, and gaming revenue through taxation is a proven situation that's positive for the state of Pennsylvania. They're now the second largest producer of tax revenue in the country to Vegas. And people came up with the idea to expand the gaming licenses. They started with probably get this wrong, like a Category 1, which is a standalone casino like Rivers in Pittsburgh, which I was involved in. I just sold my interest after 15 years. Then a Category 2, I might have the numbers wrong, but that had a casino with a racetrack. And then those were the initial licenses given out that people competed for. And then to expand gaming revenue, probably 10, 15 years ago, they came out with what's called a Class 3 license, of which there are two, one in Valley Forge and one in Nemacolin. And I applied for the one in Valley Forge and was fortunate to get it. Again, I was sued by a competitor, won that lawsuit, opened it up. And then the state came out with a new designation, which were Category 4s, with all kinds of restrictions, distance between another casino, et cetera, a local municipality opting in or opting out, or the rules. If a town didn't want it, you couldn't even apply there. But I did a lot of research and noticed that College Township had opted in. They had restrictions, distance between churches and houses, and found out that the Nittany Mall qualified. Probably there's only some raw land close to there that would have qualified, but other than that, there was really nothing in this whole area that would have qualified. And I thought it was a great opportunity. I really thought it would be a great opportunity for the area, not only for tax revenue, keeping some people that go to school here that really love it here, employment opportunities, and just a deviation from what I consider a limited supply of opportunities for restaurants and going out and having a fun evening. I mean, Penn State's great, but you have downtown and you're limited in other places. So just having the different option, I thought was good.
I agree.
Absolutely. And we don't really have too much year-round tourism, but that sort of brings in another opportunity for people to come in. Obviously, we've been to the restaurant and the casino, and we've loved our visit there. Yeah. So how much, and you've built out 3 casinos at this point?
Yes.
So how much does it cost, I guess, particularly in the State College Happy Valley Casino case, how much does it cost to build a property like that out?
The Pittsburgh casino was the most expensive.
Sure.
Probably about $500-600 million. The one in Valley Forge and here exceed $100 million.
And how many staff do you employ at that location, if you have a rough idea?
I don't know, because we're doing it. I think it's like 380 people, but don't quote me on that because it's changing every day.
Sure.
Wow.
But it will be a major employer in the area.
Absolutely.
My understanding is that the Macy's parcel, well, the previous Macy's parcel is independent of the rest of the mall. Did you acquire the land as well?
Yeah. That's very common in malls, by the way. The big department stores, to build a mall back in the 70s, they would attract a department store who would build their own. They might build it for them, and then they would own it. And then they would make their money off of the infill locations. So Macy's actually owned that building,
right?
And we ended up acquiring it.
I read an article, I think, the other day that was talking about Ira Lubert. He was talking about buying the rest of the mall minus the spaces like the Royal King and the previous Macy's, the McDonald's, things like this. Mm-hmm. But he was acquiring it from, I think it's the Namdar Group that manages and owns the rest of the mall, and revitalizing it, adding the restaurants and other things like this. And I thought that was a very good move. That mall desperately needs it. So when we saw that this casino was coming in there, we were pretty excited from that aspect because it was on its way out. The retailers were leaving, in droves, and there were even some restaurants that said they were staying specifically because of the casino coming. Otherwise, they would have left too. So to see Ira Kavajian with PrimeCore looking at eyeing up buying that space, I think that would just make that entire area revitalized even further. And we heard that you like playing Texas Hold'em. Is that true?
It's not true.
I could have sworn on one of the other podcasts that it was the one Uncorked. He said that you taught him how to play Texas Hold'em. Maybe I got
don't
that
believe
wrong.
so, no.
Maybe he was talking to the other partner. So you
Yeah.
don't play any.
I really
you
don't.
don't
I mean,
gamble?
I
No.
played blackjack, but
Yeah.
I don't really gamble at all.
Oh, okay. Fair enough.
So,
And in terms of the casino itself here, I'm sure you've heard, but there's obviously been a lot of pushback from folks, and their arguments are that it would increase addiction, crime, poverty, things like this. What would you say in general to those arguments?
I'm sure there's some truth to the fact that people get overextended, become compulsive gamblers. I think the state's done a good job putting good processes in place that will allow you to get help and also restrict you from coming to the casinos. The thing that puzzles me about, we did have a localized group that was against the casino. What I really didn't understand, and I mean this sincerely, there's a process. So when I applied for the license before it was awarded, we had 2 public meetings held at the Penn State. Or not that we volunteered to do it, that's the requirement as part of the process. And people had the right to come and speak their mind. That was the whole objective of it. Not only for State College, it's a consistent objective throughout the state when anybody has applied and was awarded a license. I attended those meetings. I mean, everybody was positive. The support was amazing to me. I felt so good. And then when you fast forward, now it took 3 years, in fairness, to resolve the legal case. And then as we started construction, we started to hear some people that had an adverse opinion and were very vocal about it. And the only question I ask is, where were they when we had applied for the license? And they had a great forum to come and speak their mind. But why they waited until the license was through a legal process, we start construction, hire people, and then all of a sudden they have a real problem.
Yeah.
I never understood that.
I agree with you. And with the younger generations now, I think what a lot of people fail to see is that the gambling is already here. It's on everybody's phones, and the students in particular are using those apps. And gambling in general, maybe not the best thing, but if I had to choose between physical location where people actually had to go and get dressed, right, and go to a location as opposed to sitting in bed or on their couch on a phone, giving their money away to an unknown entity that doesn't really employ anyone locally, I obviously would choose the former.
But our goal is to have a very positive experience for our customers. We want to do good in the community. We want to help the community. And that's our objective. And again, we won't get it perfect every time. We'll have some growing pains, but our intent is there, and we want it to be a positive situation.
If I can make a recommendation,
please.
I think if you put live entertainment in there, I think that would be fabulous.
We're planning on that, but after we
awesome.
we're planning on having live entertainment at night, especially on the weekends.
Excellent, because I think, the people that maybe say, I don't really like gambling, but they might go out to see some music or a show and, get dinner. I think that'd be fantastic. Yeah, so excellent. I'm glad
It's not going to be a concert, but it'll be live entertainment.
Absolutely.
That'd be great. I think that would do well.
Well, on that topic, are there any other local development projects in State College that you're cooking up that you can tell us about?
No, I because I have a home here, and I tend not to be as active here as I am other places. It kind of is a place I come to watch wrestling, still get involved a little bit with the university. It's a place for me to come and relax. So, I'll partner with some people every now and then when there's an opportunity that I think I like. Because I was in the casino business, I thought this was a great opportunity for the community, and that's why I did it. But generally speaking, I'm not very active today in seeking out opportunities here.
Fair enough. Moving on to a bit more general question, just on your outlook, your mentality, and your strategies. I've heard you say that timing and luck were essential in your success. And I had a couple thoughts that I just wanted to, hear what you thought. Generally when people think about luck, they're thinking it's totally random, sort of uncontrolled. I agree to sort of, but I think with luck, there's a difference between people that feel they're lucky and unlucky. And this has actually been something that was studied. There was a professor out of the UK, I think it was Dr. Richard Wiseman. He did a thing called the newspaper experiment. He had all these participants, and he said, he categorized them, do you think you're lucky or unlucky? And then he had them flip through this newspaper and count how many pictures they saw in there. But he didn't tell them that in the newspaper there were 2 ads in big text that said, if you see this ad, tell the interviewer and you're done and you collect your money and you're good. And then there was another ad that said there's 42 pictures in the newspaper, tell the interviewer and you're done. And what he found conclusively, like it wasn't even comparable, was that the people that felt they were lucky noticed the ads, and the people that felt they were unlucky flipped through every single page and counted every single one manually and took much longer to complete the exercise. So I guess what that highlighted is that there's a degree of luck where people feel they're lucky, pay more attention to the small details in life, and they see opportunity. And so I think with the success you've had in your career, I don't think it was all chance. I think that you pay attention and you notice opportunities maybe that others don't. So I wanted to hear your thoughts on that. Is that fair?
Yeah, I think it's fair. I think it's probably a combination of both, though. Sure. So I can reference another book called Outliers, Malcolm Gladwell, if you've ever read it. He says luck and timing plays a large role in your life, but it's not the only thing. When you have luck and timing, you have to perfect that skill with at least 10,000 hours to it. So I'm a big believer in that. And I do believe that, I have this saying, I don't mean it in any negative way, but, there's 1,000 plumbers someplace in the world that could have been me. They didn't have the luck and timing I had. And I really believe it. I mean, I was introduced to Pete Musser when I was introduced to him. He taught me the private equity business. I took advantage of it. I worked hard, but that introduction. Bill Gates' mother happened to know the guy out in your old backyard in Seattle, Washington, that had the first timeshare business in Seattle.
Who's that?
I don't know the name,
Okay.
but when he was a sophomore in high school, he worked at that timeshare business. He used to sneak out in his junior year or senior year. He'd sneak out of his house at night. He had a key to the business, and he would program at this timeshare. So and he drops out of Harvard, would Microsoft ever been started if his mother hadn't introduced him to this guy? I'll give you another one if you read that book. IBM was going to the Silicon Valley to talk to a software company about developing the operating system for its first personal computer. And when they got there, for some reason, the founder of the business held him up, wasn't there. And because somehow, some way, Bill Gates' mother sat on the National United Way board with the chairman CEO of IBM, Frank Carey, at the time. And somehow, some way, the mother had talked to him about her son's company, Microsoft. And they flew up to Seattle and leased the operating system. Now think about IBM leasing that operating system for a startup company. Wouldn't 99 out of 100 times you'd buy that company, not lease the software?
Yeah.
But luck and timing got him to lease that software to IBM. And the rest is history.
That's fair.
So I think it's a combination of those things.
That makes sense. And there was a second component. I kind of wanted to add that to that mix that I think is, we've touched on it before, but I think it's critical, and that's taking risk. A lot of people are very intelligent. They have the right timing, maybe. They have luck. But if they don't have an appetite for taking a risk, they might be surpassed by somebody that maybe isn't as lucky or doesn't have the right timing, but they are willing to take that risk. And what do you think about that?
No, I agree. I mean, I think taking risk is, you should take calculated risk. I've observed people that take too much risk, and I never had the guts to take that risk until I was 47 years old. But I think that, hopefully if you are going to take that great risk and it's really well thought out, first of all, I think most people need a little luck when they take that risk too. I mean, I've watched hundreds of companies. There's always problems. There's always issues. And the ones that really make it, there's always some lucky situations that help them make it, i.e. Microsoft having IBM license their software. I was pretty fortunate, and look what's happened. So I'm sure there are many more examples of that, and unfortunately, there are many, many more examples where they didn't get the luck and the companies didn't make it. I've been in a position to observe these companies, not all of them, some of them that I've been involved in and some I haven't, and luck does play a role.
Sure. Well, circling back to the timing aspect of it, you have hundreds of investments, board seats, and responsibilities. How do you manage your time on a day-to-day basis?
It's another interesting fact. I have found early in my life, I did a self-assessment in my 20s on my strengths and weaknesses. And my weaknesses, in my opinion, would have prevented me from growing a business myself. I'm a fairly impatient person. I'm a workaholic. And so as a result of that, I saw what my strengths were, and I put together a plan to complement my strengths through finding other people that could do better at my weaknesses. That's why I'm an investor. So I tell this analogy, probably directly and indirectly in all the things I've been involved in. I've been in some form, remotely or actively, responsible for over 200,000 employees. We had a meaningful investment in Albertsons supermarkets. They employ over 100,000 people. But for the last 40 plus years, I've only employed 2 people. And to this day, I only employ 2 people. The guy that runs my family office, my executive assistant. Because I found that people issues are the biggest deterrent in growing a business. So if you're everybody aspires to grow their business, and as you grow, you get more people. And what comes with people are people issues. So you're spending time resolving those people issues because they're really important. I've been fortunate that I have others resolve those people issues. So if you own 60% of a company I own 40% of, I don't deal with the people issues. So that frees me up to do what I really enjoy doing. Hopefully people think I do it well, and I just keep doing that. It doesn't work for everybody, but it's worked for me. That model has really worked well for me over the years.
Well, and those relationships have definitely been probably the biggest part of your career, I would say, at least, and maintaining those.
Yeah.
How do you trust and delegate? Because obviously delegation is huge when you have many people reporting to you. How do you let go, right, and trust and delegate?
Look, if, again, you go back to best of breed people, if you really believe they're folks that can, through their success, come my success, you have to let them grow. And, they say you also should let them make mistakes. I don't buy into that. I would like to talk to them about how to avoid mistakes and work with them. And most of my partners, when they have questions or issues, come to me. We talk it out. But some don't want to show weakness and try to work through it without my knowledge. You get all flavors. But on balance, you have first of all, I don't want to run the businesses. We get a yearly budget and quarterly reports on how the businesses are going. And if they're, deviating over 15 or 20% from their plan, good or bad, we meet and talk. We do have board meetings and all that, but if there are problems, we know about it. And they don't all work, by the way. And the last thing I'd say about this is, they pay people a ton of money who can hit a baseball 1 out of 3 times. Think about that. 1 out of 3 times. And I've been so fortunate. I've hit a baseball on average more than 2 out of 3 times. on everything I've done since 1978. So, the plan I have, I think, works. You have to be focused and disciplined and not deviate.
It's hard to let go of control and trust people and delegate responsibilities out and trust that they're going to do it right. But that's something I've had to adapt to simply in the interest of time. I only have so many hours, and you have to, right? But, you talked about mistakes, and so in terms of failure, that's something that you've spoken about a lot. And I pulled a quote from your 2002 commencement speech from Penn State, which was pretty iconic. And it is, each of you will fail sometime, somewhere, and each of you will fail. And those that are truly lucky enough will fail early and often. And I think that's true. I think that, every successful person I've ever met fails, but the difference between them and people who are not so successful is that they learn from those failures. And in that sense, it's not really a failure. So I just wanted your thoughts on that.
Yeah, no, it's very, very true. We spend all our time on the failures. Not all our time, most of our time on the failures. When a company that, we've got millions of dollars invested in goes out of business or we have to shut it down, we do a postmortem. We sit around the table, we pull out the original due diligence, we talk at length about what caused this, what did we miss? And we learn from that and try to avoid it in the future. And another thing is when you deal with investment bankers in our industry, when you buy a company or make an investment, these bankers always tend to have what's called a closing dinner. So you invest $1 in a company and they all come together and pat each other on the back. You just bought a company. Why don't go to closing dinners when you buy something? Because anybody can buy something. Just pay $1 more than the other guy was willing to pay. So why celebrate buying anything or investing in anything? I do go to some closing dinners when we sell something and it's been a successful investment. So I think that's really important. You learn from the process and try to avoid doing the same thing twice that didn't work out.
Right. That makes sense.
Well, and so philanthropy is obviously a huge part of your career, and we're aware of some extremely generous donations you've made over the years to Penn State and other organizations. So what is the Lubert Family Foundation, and what does it mean to you?
Yeah, it's again back to, I feel I've been very fortunate. My goal is when the last check I write before I die bounces. It's my goal. It's going to be a hard goal to achieve, but my kids and my wife have all the money they're going to have now. It's all been given to them, and then the rest goes to charity. So when I die, all those investments, real estate and companies, and whatever cash goes to two charitable, one's a donor advised fund, one's a charitable foundation, and my family office will monetize those investments over a period of time, and my kids will have that money to give to charity. What I don't give while I'm alive, or earmark while I'm alive to be given when I'm passed away. That's why I'm still running the family office. So I just feel like, you can only wear so many suits and eat so many steaks. I've been very fortunate, and if I'm capable of earning this kind of capital, I wanted to do something good for society.
It's a very honorable mission. Do you have a favorite charity? I wanted to ask.
I don't think so. I mean, I have, Penn State, for them, supporting me in college the way they did, is always probably going to end up being the number one philanthropic arena for me. But we have, my wife and I have others who are very meaningful organizations that will share in the good fortune I've had. I've never, by the way, as you might imagine, I've been approached by lots of charities. I've never seen a bad charity.
Yeah.
Every 501c3 has a good mission, interest in what they're trying to achieve. Everyone. Some execute better than others, but at the end of the day, you can't help everybody.
Sure.
So you have to try to prioritize. In my opinion, you have to try to prioritize so you can make an impact.
I want to speak a little bit about family a little bit because you touched on that. I've heard some people say you should never go into business with your friends or family. And you even said one of your three rules was if you hire I think you said your son or daughter, get your approval, right? So you have some caution there as well. But I also know that your son Jonathan, right? He works at Belgravia, is that right?
Mm-hmm.
What are your thoughts on going into business with friends and family, and that anecdote I said about people who say never do that?
Yeah, I don't think I agree with that. I mean, my son lives in Naples, Florida. He runs our liquid assets. He's a brilliant guy, young man. He's now in his 40s, but he's always been, I say this, he rolls his eyes. He's always been much smarter than I, much more analytical. But, I think he had challenges coming to work in our family office, because of the success I've had. For family reasons, he moved the family to Naples, and he runs that piece of our family office from there, and he's doing a brilliant job. I also mentioned earlier, he found this RAF investment, made that investment, negotiated it. He's kind enough to call me and ask my opinion before he actually writes the check, but it was his structure and his deal, and he's never going to let me hear the end of how successful that will probably end up being, but and I'm happy for him. But no, I think the thing I envy the most, I have several friends who have very successfully integrated their children into their businesses. I think it's amazing. Just look at some that are more public. So I was friendly with Ralph Roberts when he was alive. He was the founder of Comcast. And I'm not as friendly with his son, Brian. We know each other, respect each other, but we're not best friends. But Brian came into that business, took it over from his father, and took it to the next level in an incredible way. I have so much respect for how I observed Ralph integrate him into the business. And I have about 7, 8 other examples, more in the private sector, where fathers have negotiated to integrate their kids into the business and have done it very successfully. I think it's one of the harder things to do.
What advice do you have for maybe parents out there that have family businesses in terms of getting their children involved?
Yeah, no, I think if that's something, look, it's got to be a two-way street. And I think it's analogous a little bit to if you have an overzealous father who wants their kid to be a wrestler and they show up at every tournament with the kid and the kid either loves it or hates it. If the kid doesn't really like it, you shouldn't push it. That's the ones you see that are a mistake. And understanding that going in business or in, for your kids for sports, just really stepping back, taking a deep breath and understanding it and making sure along the way that the child really wants this is, I think, the harder thing and the thing I have a lot of respect for. I think if it works, it's great. If it's not dynamic and not going to work, I think you shouldn't push it.
Sure.
I think, everybody is entitled to what they want to do in life. I tell my kids and I tell other people, it doesn't matter what you do as long as you really love it and have passion for it. And that's what I encourage my kids to do. And both of them are doing what they want.
Yeah. That's great. I agree. Moving back to real estate just for a second, what advice would you have for somebody like me that's grown a very small rental portfolio, predominantly single family duplexes, things like this, but I want to take it further than that someday. What advice would you have for somebody like me that is looking to grow that?
Keep doing it. In the early years, I used to create a plan every year. And the plan was a written plan, and the plan was to acquire so many pieces of real estate. I had other things in there, and then I would break that plan down on what I had to do every day or week to achieve it. There's, if you end up having 20 single family or duplexes, at some day you could roll that up to a bigger property or refinance those buildings to buy a piece of a 200-unit apartment building. Look, the greatest hedge against inflation is, again, income producing, single family, multifamily properties. You can access capital through appreciation and refinancing and stay disciplined and focused to build that. At some point, maybe having 30 small units. First, incrementally, they're more expensive to operate than one 200-unit property. You'll come to those conclusions on your own. If you have an opportunity to sell something opportunistically that you think is a better deal than keeping it, you'll make that decision. There'll be tax consequences unless you do a 1031, but all of those things will be very apparent. But the fact that you have a goal is the important part. Just follow the goal.
Yeah. Playing off that a little bit, what kind of cap rates today would make an investment attractive to you in terms of multifamily?
Well, multifamily is the hardest asset class to buy. So if you can buy something at a 7 multifamily, 7, 7.5, it's a good asset class to buy, and that's a good cap rate. Mm-hmm. But I try to buy things at a 10 or 11 because they have problems. So again, buying someone else's revenue stream isn't what I do. I don't buy the well-maintained, great asset that you created. That's called a value asset play, enhanced value. You're just buying someone's revenue stream, hoping that you're going to make it better. I buy someone's problem. I hope I make that better.
Yeah, that makes sense. So we're almost getting to the end here, but I wanted to ask a little bit about advice for students at Penn State. And one of the biggest pieces of advice that I give them is take advantage of the networking that you have here at Penn State. You know, at this point, I think I've forgotten most of my classes, right? But the people that I met, I still stay in touch with, and those connections are sort of invaluable. But what are your thoughts on that, and what advice would you have for Penn State students that are graduating here in a week now, right?
Yeah, next week. Yeah, I think that's sound advice. I mean, look, relationships mean a lot. You meet a lot of people. I think I'm contacted by a lot of wrestlers. I have a lot of respect for them. They call me up to ask if they can come see me, and I constantly talk with them and give them my advice, try to help them. So I think relationships are important. Look, Penn State has a phenomenal, largest alumni base in the world. Take advantage of that. There's no crime in being a little assertive or aggressive if you can use the commonality of a Penn State degree to get an interview or meet a potential mentor. You know, when we were their age, that's what we were doing. You should be doing the same thing. And if you're in a position to help someone, you should remember that someone helped you. So you should give it back.
Well put.
Absolutely. Is there, piggybacking off of that a little, is there any advice you would give to your younger self coming out of college or getting started?
You know, we all have regret. I mean, you can look at specific things that I could have done better. I mentioned a couple deals I didn't do that I kick myself now for not doing. But on balance, I really honestly don't look back. I mean, nothing's ever perfect. There's always issues in the world. There's always issues in life. I honestly can tell you that I've never looked back and said, I wish I had done this versus that. I've lived a great life, been extremely fortunate to be able to do the things I've done. A lot of great relationships, great fulfillment of being able to have come to Penn State, meet the people I've met, achieve what I've achieved. So I really don't have advice for something backward. I think at the end of the day, either by direction or by circumstance, you find something you really like, you have passion for it, and then like the book Outliers say, you got to perfect it with at least 10,000 hours of work. And then if that's what it is, you should do it.
And within the last couple of years, you decided to ramp down and retire, right, at 74?
I don't think ramp down is the appropriate word. My wife thinks I should be more ramped down, but I'm going to work until I die. It's like I don't play golf, so to me, I enjoy what I do, but I do less of it in a different way. I have people that do things for me, like business dinners and the due diligence and things like that. So today, the only difference today is I'm typically in the office still at 8:30, but I usually leave at 2 or 3. And, I don't have the same pace I had 20 years ago, but I do the same things. And the things are typically bigger. I do less of them, but bigger.
That makes sense, yeah. I don't know if you fit the traditional definition of retirement,
Yeah.
but it probably is retirement relative to what you were doing before.
I call it semi-retirement.
Fair,
Absolutely.
but that's good. Staying active is fantastic.
Are you planning on spending a little more time in Happy Valley now? Yeah.
Well, I'm here a lot during wrestling season.
Sure.
I was here when I was chair of the board. I was here every 7 to 10 days because that's just like a full-time job. But I really enjoy it. So I get up for football games. I'm here for a lot of wrestling matches. Now that I have the casino, I'll be here, in and out. So no, I really enjoy it here. So it's my place I'd like to get back to.
So one of the last questions we had for you, is it fair to say that you're bullish on Happy Valley in the future?
Absolutely.
Well, we're glad to hear you say that. We actually got you a little thank you gift for coming here today.
Thank you.
And it's going to make sense here in a second. But we kind of did this last minute. Our friends at Signature Engraving helped us out.
That's great.
We figured that you had quite a few lions with plaques on them, but we figured you probably didn't have a glass bowl.
I do not. So
Okay, good.
That'll go on my shelf in my office. Thank you so much. That's
You're
really
welcome.
very considerate of you.
Oh yeah, we're happy to do it. And, we wanted to say thank you for
Thank you.
coming
thank you
on,
for
and
coming on.
we really appreciate your time. And speaking of time, we know how busy you are, and so really thank you for taking the time to do this.
Thanks for having me. This is good. Thank you.
Absolutely. So I think that kind of wraps it up. Was there anything else that you wanted to speak about or talk about?
No, I think you covered it all, actually.
Okay.
I really do.
Well, good. The only thing I got wrong was that you don't play Texas Hold'em.
I don't play. I don't think I've ever played Texas Hold'em.
No?
I played blackjack,
Okay.
but I think that's the only. I'm thinking back. I think that's the only game I've ever played.
But anyways,
Yeah.
so thank you again, and
Good.
thank
Thank you
Joe.
so much.
And we'll see you on the next episode.